McDonald's earnings coming up later. Give us your expectations, your rating, and your price target.
Yeah, so we're expecting EPS of, we're expecting the same-store sales of just about 4.5%. Most of that will be pretty consistent across the globe. What we have said is that we think there will be some impact from the Middle East on international markets, just because there has been some, news and social media narrative. So this is relatively small in terms of the financial impact on the Middle East, but as we've seen, there have been broader implications just because of the sort of geopolitical tensions. We do have EPS of $2.81. We are neutral on the stock just because we think, given where we are in the economic cycle and given, sort of the economic model that McDonald's has, we don't expect to see a lot of EPS upside.
Okay, not expecting a lot there. I want to touch on another company reporting its earnings, and we'll talk about the broader space. That's Chipotle. It's coming up later today. Also, you have a recent note. You say when it comes to Chipotle, one big factor is innovation. So when it comes to Chipotle, I do have to ask, what's innovation? Is it carne asada or is it the drive-through lanes?
It's both. So, I mean, carne asada is actually back for the third time. It's a testament to just how much consumers like that. And we've seen them do a really nice job with their LTOs, some new, some recurring, but nothing that complicates the operating model or the make line, as they call it. And I think that is also a good segue to these Chipotle lanes. People want access, they want convenience. And what we have seen is that if Chipotle can maintain its speed, consumers come more frequently. And we do expect the company to have positive traffic.
All right, so your price target is $2,700, about an 8% upside when it comes to Chipotle. You mentioned the economy and how it might impact McDonald's compared to how it might impact the Chipotle. How does the economy impact these players? I mean, of course, everybody has to eat, and these are generally lower-priced options when it comes to food.
That's true. And I think, what we have seen is the consumer, I think the watchword for the consumer is resilient. And what we've seen is the consumer has continued to spend, especially on restaurants. So while both of these companies have benefited a little bit from trade down, so McDonald's sees the benefit of having lower price points, versus, for example, some other fast casuals, burger companies, or Chipotle benefits perhaps from trade down from full service restaurants.
Right.
The fact is that we see continued spending, and so we don't think you need the safety necessarily of McDonald's.
All right, one other factor that's impacting the quick service restaurant space, at least in California. So in California, food prices, they're actually expected to rise this spring in response to the state's $20 per hour minimum wage law. What does that mean for the restaurant sector, specifically in California? How important is California to the sector, and if we see similar trends in other parts of the country?
Yeah, so I mean, California is not surprisingly, is a reasonably big part of most restaurants. It's about 15%, for example, of the store base for Chipotle. And what we'll see, I think, across the board is we will see an increase in prices to cover the increase in wages. And pretty much every restaurant has said as much. They're going to try to, minimize the impact on consumers, but ultimately labor is a really big part of their cost structure, and there will be a need to take prices up.